Is Canada in the midst of a banking crisis as BMO does some more suspicious things which make you believe that they could possibly be in trouble? So let's get right into this and see what's going on. Bank of Montreal is exploring the sale of RV loan portfolio. Now think about the quality of the RV loan portfolio that they're selling. Do you think that's going to be a good asset for them to hold on to, considering what's happened over the past couple of years? Obviously not. You've seen massive amounts of people buying RVs who cannot afford them and financing them through places like BMO. And these are longer duration loans. So that means these loans have declined significantly. So one has to ask the question, why would they sell them? Because obviously, if they do sell them, they're going to take a massive haircut on those loans because they are such long-term loans and interest rates have gone up so much since most of these loans were originated. So it's very interesting. Let's dig into what is going on. The face value of the portfolio is at least $5 billion, the report said, adding that the Canadian lender is in discussions with potential buyers, including credit arms of alternative asset managers. The potential sale comes at a time when several banks in North America shed loan portfolios to bolster balance sheets in the face of higher for longer interest rate environments. So, I mean, that doesn't sound very good. And if you couple this with everything else that we've been talking about on this channel over the past couple of months, it just doesn't look good for the banking system, does it? And it's not really a question of is BMO going to collapse. I think they're too systemic that the government would let them collapse. Just think about how much stock CPP owns, so it puts a political interest in the government's favor to keep BMO going, even if it's a failing entity. So it's very interesting, but obviously the signs when they're doing something like this, we have to think past what's going on and couple this with everything else. We can't comment on specifics of the transaction, a Bank of Montreal spokesperson told Reuters in an emailed statement. The sale of loan portfolios, particularly those which are rate sensitive, allows lenders to manage risk and keep credit loss provisions or capital set aside to cover potential defaults. Now, what's really interesting though is, like I said, obviously this loan portfolio is going to be worth a lot less money than it was, say, 2-3 years ago. So the question is, why would they unload this at a loss? Obviously, they're trying to raise capital for something. Does that mean that they're in trouble? It's impossible for us to tell from the outside looking in, but we can look at stuff like this and say, hey, this sounds a little bit suspicious when you couple it with other things that are going on. So obviously we had this that came out and we covered on this channel before, BMO winding down indirect auto loans. So just briefly, in case you didn't see this, the Bank of Montreal will no longer originate indirect auto loans, the bank announced Saturday. The bank has operated its indirect auto loan business, in which it works with car dealerships to set up buyer financing and then receives payments directly from the buyer in both the US and Canada, where it is headquartered. And think about what is going on in the auto market right now. I mean, the auto market, especially the loan side of the auto market, it's just a massive mess essentially, because obviously all these people have bought cars, they've been inflated prices, used car prices especially have gone up massively over the past couple of years. I mean, I sold a car that we owned last year and we sold it for more than we bought it for in December 2019, which is just unbelievable considering it was like 2-3 years older and you had the extra mileage that was on there as well. You know, just absolutely insane. And think about the people, if they bought that and they took out a loan, what's going to happen to them? Essentially, they're probably upside down on that loan right now because there's not as much demand for used vehicles. Demand has gone down because people can't afford to buy them. They're even financing them. You know, 90% of these loans are financed. Even so, people just cannot afford to buy these. So obviously them stepping away from the auto loan business is yet another sign that BMO is probably not in the best of shape. And it's not just this, it's also this. BMO Private Wealth makes layoffs, changes to leadership structure. This was announced not that long ago. The brokerage reduces regions to 4 from 6, eliminating 9 positions. So you've got to think about that. They're just downsizing. The bank is downsizing. That is not a good thing. And we got layoffs in other places in the banking system. It's wrong to just point the finger at BMO, but it sure does look bad when you've got CIBC, BMO, and Scotiabank, where their stocks are struggling the most, where they've got a lot of risk on their balance sheet, especially CIBC and BMO, in terms of these negative amortization loans. And the marketplace is looking at these banks and they're thinking, you don't look in good shape. And you've only got to think things through. It takes a couple of lenders to cut BMO off, and then they can run into liquidity troubles. And in fact, this might be a sign that they're running into liquidity problems already, because they're having to fire sale assets. They're not saying in this article that they're fire saling the assets, the Reuters article that says they're exploring the sale of the RV loan portfolio. But think about it, guys. You don't have to be a rocket scientist to work out that this RV loan portfolio is worth peanuts compared to what it was worth, 2-3 years ago. So why now, and why are they selling that portfolio at such a big discount? Because it will be a discount. It is definitely something that we have to look at and say, what is going on there? And obviously BMO as well is exposed to China, has this financing arm out there in China, and it operates and does corporate lending, as it says right here on the Asia website. How much is BMO involved in the Chinese real estate market? And what sort of effect is that going to have? Because obviously if they're involved in the Chinese real estate market, we know what's going on with lots of the big developers there. They're defaulting on all these loans and bonds that they've issued over the years because the Chinese real estate market is essentially imploding. So that's a potential risk that is on their balance sheet. Obviously, you've got the commercial real estate risk, but this is one that I think maybe the marketplace might be taking a little bit more seriously, because all these banks on this list have got massive amounts of negative amortization loans. So BMO disclosed that mortgages worth $32.8 billion were negatively amortizing in the third quarter ended July 31st. That is the equivalent to 22% of the bank's Canadian residential loan book for the second quarter ended April 30th. The total was $28.4 billion, equivalent to 20% of BMO's loan book. So it's increasing. The more loans that are in negative amortization, that does not look good on a bank. That just essentially is like a shadow default, as I've said on this channel, is people cannot afford to pay their mortgage. If their balance is increasing, they cannot afford to pay more on their mortgage. And we know the Canadian housing market has been in a dire state, even if you go back as far as 2020, because in 2020, everybody was taking out those mortgage deferrals. Now you have a massive amount of people who are negatively amortizing their loan. The Canadian housing market is not in good shape at all. And you've got some areas that are now falling below their 2020 levels in terms of pricing. So they're going back to pre-pandemic prices. So think about how many people are underwater on these loans who are negatively amortizing right now with BMO and CIBC. This is not a good look at all. And obviously the reaction from what's happened at BMO has not been good in the stock. Last week it was down around 5% and it went down straight after that announcement. So obviously BMO's stock is not performing too well either, and that can also impact their funding as well, because people will start to look at them and say, hey, your market capitalization is shrinking, you've got problems on your balance sheet. We can see that you've got a massive amount of negatively amortizing loans, and if you go back to 2008 and look how well those type of loans worked out for the US banks, they were just a total disaster. It's not as if this hasn't been done before when it comes to negative amortization and pushing out these amortizations to 100 years. It has been trialed before in the United States and it doesn't work. And here in Canada, when people renew, they're going to be faced with massive lump sum payments that they're going to have to make, and they're not going to be able to do it. And then they're going to turn around and try and sell their house and realize, oh, it's gone down in price a lot. So they're not going to be able to sell their home. So they're going to end up short selling it or going into foreclosure. And then that's going to impact banks like the Bank of Montreal. It's actually better for banks like Scotiabank, where they're not allowing this to happen and they're passing those increases directly onto the customer. At least then they can manage their risk better, because they'll be able to see which borrowers are struggling before all the other banks do, which have just allowed essentially people to go into shadow default and aren't really monitoring the situation. And the regulators are asleep, because obviously the regulators, they are just run by the banksters themselves. So the regulators aren't listening. You've got people like Chrystia Freeland who are coming out and saying, everything's fine. Our banking system is absolutely rock solid here in Canada. How many times do you hear the banking system is rock solid? But things like this don't make it look like that, do they? You don't have to be very smart to work that out. All these things going on, does that really really look like a solid banking system when you've essentially got banks trying to fire sale different things? And obviously we knew we were going to get to this point because the amount of debt that has been accumulated in Canada is utterly ridiculous. This chart is old and it's well above $2 trillion now. $2 trillion in debt. Think about that in the context of Canada's GDP, gross domestic product and output. It is literally higher than that. So there's no chance that all of this money is going to be paid back, especially considering the economy is actually contracting right now. And we are probably in a recession by the government's definition. We won't find that out for another 6 to 8 months, and they may change the definition. But we're 100% in a recession right now. I can see it just by the comments and the type of emails that I've been receiving over the past 4 or 5 months. And it's evident in the data too, which, as we know, is completely manipulated. But if we know how that data is manipulated, we can look at it and say, hold on a second, we are in a recession right now. So what are we heading into? Ultimately, a depression, it looks like. And I don't want to say that. I don't want to be the person who says that, because ultimately that is just going to be disastrous for so many people. I mean, the people who are already coming to Canada, they're already in that depression and realizing pretty quick how bad things are right here. A lot of them want to move back to their countries. A lot of those countries are third world countries, but they're in a better state than Canada. So what does that tell you about what is going on here? Obviously, when you have credit market debt to disposable income going over 180% higher than the US in 2008, when you've got Canada, the second highest household debt to income in the world, that definitely does not mean good things for your economy. So all this with what's going on in the banking system, what do you think? Let me know in the comments. So anyway, if you've enjoyed this video, you might like this video here. You might like this playlist here. If you're looking for a VPN, which you desperately need, this broadcast was brought to you on a VPN. Go to expressvpn.com/market mania to get around Bill C11. I'll see you in the next one. Take care of yourselves, guys. Bye-bye.